Well, good evening. My name is Scott Oling. I'm a partner with the accounting firm of PKF O'Connor Davies, and I am here tonight to discuss the results of the annual external audit that we perform for the Pleasantville School District for the year ended June 30, 2025. New York State does require all public school districts in New York State to have an annual financial audit. And so that's part of the requirement, just like the school districts are also required to have an internal auditor to review your internal control processes over finances. It's also why you have to have a claims auditor that reviews all the bills that you pay other than payroll. So these are just mandated under New York State education law. So we conduct the audit under that law, as well as in accordance with generally accepted accounting principles, government auditing standards, and so forth. So that is why we are here tonight going over this. So what we're going to talk about here, just for a few minutes that I have, we went over this, or I went over this in detail with the audit committee about a week ago. So this is just more of an overview for whoever might be watching right now. We are to primarily discuss the activities in your general fund. That's really the fund that most of the residents would care about. It's where most of your activities occur. It's what the voters vote upon each year, authorizing you to spend the resources that the taxpayers provide to you. And then we'll just briefly touch upon some of the activity in some of the other funds that the district has, and what your current debt service obligations are for all the monies the district has borrowed to do various capital improvements over the years. So first off, for you folks as management of the district, as the board in charge, you have certain responsibilities as relates to our annual audit. Primarily, as it says up there, to make sure that you have adopted appropriate accounting policies, that the financial statements that we're reviewing have been prepared in accordance with what's called U.S. GAAP, generally accepted accounting principles, that you've established effective internal controls over reporting, your systems for making sure that payroll and claims payments and cash receipts are functioning properly, because otherwise, if they're not, the numbers that the system is producing will not be reliable. You have numerous laws and regulations to comply with, both at the state level. You also get federal dollars, so you have various things to follow regarding the spending of any federal monies that you get. And then you are also responsible for making sure that we get all the financial records and any other information we need to properly conduct the audit and get all the audit evidence that we need in order to issue our auditor's opinion on your financials. What our responsibilities are a couple of other things. Mainly what we deliver in the audit report is our audit opinion. That's the only thing in the 80, 90-page audit report that belongs to us. We're happy to report that we've issued what's known as an unmodified opinion, or a clean opinion. That is the highest form an auditor can provide a client. It basically says we believe your financial information fairly presents what happened here in the district from a financial point of view. And also we issue what's known as a yellow book audit opinion. That's the one on internal control and compliance. In addition to the regular financial statement, we also issue a separate report on your extra classroom activities that go on. And some of those numbers are included in the main report, but New York State requires a separate report on all your club activities that the district has. We issue a what we call a management letter, or a communication to those charged with governance, and you're in possession of that. I'm also happy to report that, as we go through this audit each year, I'm happy to report that we did not, thankfully, come across any fraud or illegal acts during the audit. Otherwise, we would have had to notify you. No difficulties in doing the audit. John Chow, his whole team, very cooperative, very helpful, and we really get through the audit, very smoothly. We really didn't have to make any audit adjustments. The books were in really good shape, and we agreed with all the numbers that were presented. The timeline this year, it actually began back in June, where we do some preliminary audit work to kind of get prepped for the audit. Then we were in here for a week in mid-August doing the main field work. Unfortunately, though, you see there's a big gap between when we're here for the field work and when it's actually primarily completed. A lot of that had to do with delays from New York State in providing information that we need for the pension reporting requirements under one of the provisions that we have to do. It keeps getting issued by the state later and later. This year, it didn't come out till like September 8th. Last year, it came out like August 31st. Year before that, it came out like August 20th. So this is not a good trend, which is, going to delay things, going forward as well if that continues. And then, as I said, we met with the audit committee about a week ago. So the numbers for the year came out, pretty good. You had revenues estimated in both your original budget that the voters approved, and as the budget gets amended and adjusted by the board during the year and produces the final budget amount. When you look at the revenue line, the revenue estimate stayed the same at just under $60 million to operate everything for the district. And you could see the actual results in the third column came in at about 60.7 million. So your revenues came in about 750,000 better than expected. On the spending side, you actually expected to spend about $61.5 million for all the costs of operating the district. And you could see you only spent about $57.9 million. There are these things called encumbrances for almost 700,000. These are just purchase orders that weren't finished at the end of the year, and they will carry over into the next year. So you really did underspend the budget by almost $2.9 million. You recognized a whole bunch of savings there. So when we come down to the bottom of this page in the first two columns, you see like a negative $2.1 million. So when the budget was adopted and approved by the voters, you actually expected to spend $2.1 million more than you were going to take in. But you had previously accumulated fund balance from prior years. So you basically said, hey, we'll use some of our savings account potentially to bridge the gap between what money is going to come in and what money is going to go out. That was the plan, that you would dip into your savings by 2.1 million. But the good news is in the actual column, the third number up from the bottom, not only did you not dip into fund balance, but you actually added almost 2.2 million to fund balance. So that's why overall in the far right column, there's a very positive variance of about $3.6 million. That's how better you did than what you planned originally when the budget was adopted. So that 2.1 million, what I would call surplus for the year, gets added to your fund balance or your savings account that you started the year with of 14 million. And you could see you ended the year with just over 16 million in total fund balance. A couple of, trying to take a little dive into the revenue side of what happened this year. We're showing you on this slide, we're showing you about 5 major categories of revenues that account for almost 100% of your overall revenues. But you can see the property tax line comes in on budget because the town must make you whole, whether they collect the property taxes or not. The school is made whole. The school tax relief reimbursement is the money that the state pays you on behalf of certain property homeowners who participate in the STAR program, and that money comes directly to the school. This number has been declining each year because of changes that the state made in the STAR program. And as new homeowners purchase houses, if they qualify income-wise, they get the check directly, and then they pay the full school tax bill instead of it being netted down and you getting money. So I would expect the STAR money that comes directly to the school from the state will decline each year as payments are made to homeowners themselves. The non-property tax distribution is the sales tax money that comes to Westchester County. Westchester County years ago made a revenue sharing agreement with all the school districts and municipalities within Westchester, other than the big boys in Westchester, Yonkers, New Rochelle, White Plains, who have their own sales tax arrangements. So the county shares approximately 25% of what they get in sales tax with all of the schools and municipalities. There's a formula. It's based on the census, gets adjusted every 10 years. So you took in just over $1 million, relatively flat with last year. This district gets a lot of tuition. You take in a lot of students from out of district to provide education, and you collected just about 4.3 million this year, or almost 400,000 more than last year. And then lastly, another big component of your revenue is state aid. This is a summarized version of state aid, but obviously state aid is made up of many complex components of how the state arrives at it, between foundation aid, building aid, transportation aid, all these things. But overall, you collected about the same as the prior year at about $12.6 million. This slide just shows you kind of those same revenues, but gives you a 3-year history. So you can see, what's happened. Your property tax has basically just increased by the tax cap limits. Depending each year, it fluctuates a little, but generally in the 2 to 3% range. You can see the sales tax has grown a little bit each year, but relatively flat. Your day school tuition has grown, pretty nicely over a 2-year period. State aid also grew. Some of that was the state fully funding, finally, the foundation formula. Some of it has to do with your own activity here, because you do get building aid on all the capital construction projects that the district has undertaken. On the spending side of the budget, what we did here is highlight another 5 or 6 main categories of the budget. These categories account for about, as you could see, almost about 70% of the overall spending. So operation of plant is what it basically takes to operate, the district, the buildings and grounds component, the facilities kind of costs of operating the district. Teaching regular school is your main expense code. That's the salary for primarily all the program activity, all the teacher salaries, guidance counselors, principals, anything that's program related is within the teaching regular school category under New York State. Programs for students with disabilities, the special ed costs that you incur, either in district, out of district, whatever, those are about 8.7. Those actually stayed pretty flat with last year. Most districts, this cost has really been jumping year over year. Transportation costs, pretty consistent with last year. Then we highlight a couple of your fringe benefit categories that you have to provide your employees. The teacher's retirement system at about $2.2 million. It's just based on a percentage of the salaries that you pay certified staff. This year, that rate was about 10.1% of teacher salary. And everybody in the state pays the same rate to the pension system. Social Security, the FICA cost, the employer share of FICA, again, pretty consistent with last year. And then health insurance, just like everywhere else, going up, for everybody every year. Yours was up about $300,000-$400,000 compared to last year. Again, comparing over 3 years, you actually see here that you've actually done a really nice job of controlling spending, because over a 3-year period, it's almost stayed, pretty flat again in these particular categories. So, that speaks to, how you're managing your budgets here each year. This is probably the most important slide of the dozen or so slides I have. This is your fund balance in the general fund. So this is your savings account that we kind of talked about, again, on a 3-year basis. So as I mentioned on an earlier slide, your fund balance this year grew by about 2.2 million when it was expected to potentially go down. So overall, it went up from 14 million last year to about 16.2 million this year. But in school district accounting ways that we have to do it, you're allowed to set aside a certain portion of your savings account for specific things. So all these things in the first group for restricted fund balance are all established under general municipal law or education law, but none of these things can happen without board action. So you're doing it under that umbrella, but the board itself has to take action on these. So you've set aside about $2.7 million to satisfy any outstanding tax certiorari claims when homeowners or businesses seek a reduction in their property taxes. If a settlement is reached, then you have to refund a portion of the taxes that businesses or individuals paid. You have another about 1.8 million for this employee benefit accrued liability. That's essentially like vacation or sick time that would be owed employees. You have a pot set aside. So if you had an unusual amount of retirements in a given year and you hadn't budgeted to, pay folks out for whatever they might be owed upon, leaving or retirement, you would be able to, to dip into this pot of funds to help pay for that. Then you've got about 1.1 million set aside for the employees' retirement system, to pay that pension bill for non-certified staff. And you also have about 1.6 million set aside to pay any teacher retirement system pension costs for certified staff. You have money set aside for various liability claims. These could be, deductible portions of any, problems that happen on insurance policies. And then you currently have 3.7 million now set up in your future capital projects reserve. You see almost a $2 million increase from the prior year. That's where most of the surplus you put this year went to. You had voter authorization to create this reserve, and then you will need voter approval to spend from it. But it would help offset, future projects that the district might be undertaking, rather than having to go out to bond and incur interest costs and so forth. You now have, a pot of funds that would be available to help offset that in the future. You have, as we saw before on the other slide, what are called purchases on order, or 699,000. These are purchase orders that just were not finished as of June, but were out of last year's budget. So that authorization rolls over into the budget you're in now. So John and his team can finish paying those bills and have authorization to do that. Then you used 1.1 million to help balance the year that you're in. So where I showed you on the other slide where you expected spending to exceed revenues, when we do this again next year, you're also going to see the expectation that you're going to spend more than what you're going to take in. But because you have this fund balance, you have those resources, because otherwise you would have had to cut spending by 1.1 million, increase property taxes an additional 1.1, something in between, because you have to adopt a balanced spending plan, unlike the federal government. So what's left out of that $16 million savings account is this $2.5 million. That's the plug, as we call it. It's the unassigned fund balance, or what we call free and clear fund balance. That amount is not allowed to be more than 4% of your next year's budget. This amount is right at that maximum of 4%. So you're really in very good shape here, because you do have money in reserves for specific items, and you have the maximum that the state allows in unassigned fund balance. So, kudos to the district for that. And then lastly, other fund balance accounts. These are non-general fund things. So right now in your capital projects fund, you started with 2.5 million, but money was spent this year on various things. Some money came into the fund, and right now there's $800,000. But I know the district has plans for some more significant capital projects. There will probably be some borrowings through debt to finance what you have planned in the upcoming years. You do have a nice amount of money in your debt service fund. You have $2.6 million. That's important because that comes from either previously bonded projects that you didn't have to spend as much as you thought. So now you had extra money. That goes into this fund. If you earned interest while you were spending the money, that goes into this fund. These monies can only be used to help offset debt service costs going forward. So as you're developing the next budget and so forth, this would be, a bucket of funds that could be used to help offset any new debt, that's coming on. It helps level everything out. So this can only be used against future debt. The school lunch fund is what school lunch sounds like it is. It's the income and expenses to operate the lunch program. It stayed pretty flat for the current year. Overall revenues and spending came in just under $700,000. Includes federal aid, state aid, and the amount of money that, folks pay, out of pocket for lunch. And then special purpose is kind of like a catch-all fund. The primary thing that goes through there are those extra classroom activity funds. And we talked about that earlier. Lastly, the final slide is just your current debt situation at the district. So you currently have 5 bonds outstanding issued in various times. The original amount of this debt was about $53 million. As of June 25, after you make pay downs each year on this debt, you currently have outstanding debt of just over 37 million. What's more important, though, is the bottom chart, which shows you how much you have to pay back on that 37 million each year, for the next 5 years, and then in 5-year increments. So if you look, for, the next, 5 years at least, or 4 years or so, your average is somewhere just over, between principal and interest, about $4.5 million. So each year, as you prepare the budget, out of, we saw budget's about $60 million, about $4.5 million goes to paying your debt obligations on the monies that you borrow. That's not a lot, as a percentage of the budget. Generally, we see, in most districts, it's somewhere around 6 to 8% of the budget, which is approximately where you folks are at. And then obviously, if you're going to borrow more, and it might add to that, but some of these bonds might drop off. So there'll be ways to time it out, use the balance in the debt service fund, to help smooth that out a little bit. So, that's what you have in your debt service fund. And with that, that's pretty much all I had.